All right, what's up, traders? Welcome to our weekly trading forecast for the week of 18th of May to 22nd of May. All right, so here's Dylan, and over here we have JJ as well. So as usual, we'll start off with the dollar index. So let me just share my screen right now. All right, so this is the dollar index. This is the day charts. So as you can see, last week itself, the price is still trading within the range. So last week, the price actually came up from this level. Okay, it showed up very fast in the beginning, but over the next 4 trading days, it's just more or less moving sideways. And we can see there's a very obvious exhaustion with the buying strength. So right now, since the price is already trading at the top, okay, of the entire range itself, I would say that we can actually look for opportunity to sell at the top of the range again. And because this is still not really at the end of the range yet, so I think there's still a very good chance for the price to reverse at the top of the range again, all the way back to test the bottom. So let's probably take a look at the 4-hourly charts as well. So in the 4-hourly charts, what we can observe is that the price, okay, ever since it climbed from the bottom, this is the first wave, okay, it pulls back, and then it came up with a second wave of a bullish trend, which did not really break above the resistance right here. Okay, it pulls back again, and finally a third bullish wave, which actually finally got the price to break above the previous high. But however, as we just mentioned, okay, the price is now trading at the top of the range. So in this case, right, we can see that it's actually forming something like a rising wedge. Okay, if we were to connect the lows right here and the highs, you can see that it's actually forming a rising wedge and it's coming to the end. Okay, within this wedge, there's already 3 waves of a bullish trend, or in fact, in total, a total of 1, 2, 3, 4, 5 waves of a trend. So it's pretty much coming to an end. So this week, what I'm expecting is that price might, okay, go a little bit further, okay, test the top right here, and if there's a sharp pullback at this price, which is somewhere at 100.6 to 100.8, okay, then we can actually look for an opportunity to sell the dollar index from the top all the way to the bottom again. So here are some levels to watch out for as it fall. Okay, number 1 is somewhere right here. So this is obviously a demand zone, okay, that we want to watch out for. So this is somewhere at 99.8 to 99.7. And of course, if it's able to break lower, okay, maybe it pulls back first, okay, before it shoot down again. And of course, the final level we want to take profits is at the bottom of the entire range, which is somewhere 99.3 to 99.1. So that is for the dollar index. And next, I have the gold. All right, so for the gold itself, let's take a look at the day chart first. So in the day chart, we can see that, right, in the bigger picture, the price is still rising within a rising channel, okay, which started since last year in May. So this is a total of 1 year. Okay, it's already forming for the past 1 year. And right here, last week, we saw that the price, okay, it continues to climb, and it broke out of this symmetrical triangle. So just want to explain a little bit on this entire trend. Now we can see that this is the first bullish wave, okay, and then it pulls back. This is the second wave, a pullback, a correction, and here's the third wave, okay, shooting out all the way to the top of the rising channel, and here's the 4th wave, and this 4th wave took a little bit longer because it's forming a ABCD triangle. It's actually a correction, okay. So here's 1, 2, or rather A, B, C, D, and E, before it finally take off and break above the top of this correction structure or the symmetrical triangle. So in Euler wave theory, this is the first wave, okay. The second wave is a pullback, the wave is a motive wave, okay, a trend again. Okay, the 4th wave, another correction, and finally the last wave, okay, which will bring us to a higher price. So if this is the 5th wave, okay, if the entire analysis is correct, then this week we will focus on buying the gold, even more. So this week we want to wait for the price to pull back first. So let's take a look at the 4-hourly charts. All right, so based on the 4-hourly charts, we want to wait for the price to pull back, okay, towards this level right here. This is the previous resistance, as you can see, an important level. So if it pulls back, okay, what we can do also is to, pull out a Fibonacci, okay. Sorry, from right here, the swing low to the swing high. All right, so here is the 50%, and slightly lower will be the 61.8%. So within this zone, okay, here is actually a obvious demand zone as well. So between the price of 1,720 to 1,712 is where we want to continue to buy the gold again. And as for the target, I think firstly, we want to look at the previous high again, or the top of the channel. And subsequently, we have to go and take a look at the weekly charts. So in a weekly chart, we can see that right here, okay, there's very, very strong resistance. This is all the way back in 2011, October. Okay, price, there's very strong supply demand, supply zone right here. So the final level we will be looking at is within this zone, and that is between the price of 1,780 to 1,802. Right, so that is for the gold. All right, with that, I want to pass my time over to JJ to share his trading plan for the week.
All right, so my first focus for this week would be the euro dollar. Similarly to the dollar index, we'll be looking to sell the dollar. So this week for euro dollar, it hasn't been doing much. It's just been ranging at the bottom of this consolidation pattern. As we can see, price has not broke below this demand zone, so we can still look to buy the euro dollar. So if price gives us an opportunity to buy back at this level again, I think we could look at the first take profit level, definitely the top of this consolidation pattern. And if it's able to break above, then we could look at these two supply zone as take profit levels. Next, we'll look at the dollar CAD. This week, dollar CAD got supported at the bottom of this triangle consolidating pattern, which is also a very strong demand zone from this inside bar candle. As we can see on a smaller time frame, after price got supported, it went all the way back up to the top of this pattern. Although price didn't just go all the way down immediately, it came back up for a retest before the market closed. So if this week, if this price can get resisted, I think we can sell the dollar CAD again. Similarly to the previous pattern that formed this double top here, we can look for a similar pattern to form here. Next would be the pound dollar. So over the past few months, since about 20th May, the pound dollar has been forming this head and shoulder pattern here before coming down. So since 1st of May, price has been just dropping, and it's coming very close to this 3-year demand zone. You can see that throughout these past 3 years, every time price came down to this level, it would get supported. And as of now, price is quite bearish. So if there's enough momentum to bring price back to this 1.2 level, I think this is a good level. We can look to buy the pound dollar again. Yeah, so that will be my 3 analysis.
All right, thanks JJ for sharing. And for the pound dollar, I think it's a good time to buy again. Since we already know that actually pound is very undervalued, and if it's not because of COVID virus right now, the pound could probably already recover much faster than it should be. All right, so next I will be sharing my screen again. All right, so last but not least, I want to talk about the Dow Jones. All right, so this is the daily charts. Sorry. All right, so this is the daily charts. So we can see that the price actually started to recover somewhere in 23rd of March, okay, and has so far recovered with Fibonacci, we can see that it has already recovered close to 61.8%. And right here, okay, is actually, we can see that the price is not that strong anymore. And we want to understand that this entire recovery is due to government and central banks that's pumping in money into the market to stop it from crashing. So it is not going to be organic. It's not going to last, and it will definitely come down again. So there's already multiple breaks of a bullish structure, such as the rising wedge right here. Okay, and if we were to put a trend line right here as well, it broke below as well. And most recently, okay, let me just remove these lines. And most recently, okay, it just broke below this this trend line again. So we can see that the entire trend is finally bending downwards. So it shows that the Dow Jones and getting nearer to June itself, okay, Dow Jones might start to drop, might start to fall again. All right, so going into the 4-hourly charts. So in the 4-hourly charts, this week itself, we want to look for opportunity to sell again. So as you can see, this is where the price broke and price has already pulled back a little bit further. So we want to wait for the price to probably it might consolidate for a while more, okay, and it might pull back again. So if it pulls back, then here's two things we can do. Number one is that we can always put a trend line, okay, and find where's the resistance. And obviously, okay, right here at the previous low right here, okay, is somewhere at the top of is somewhere that it coincides with the falling trend line right here, and we can always plot the Fibonacci as usual, okay, from the swing high to the swing low, and we will see that this level and all the way to this level, 61.8%. This is 23,900 to somewhere 24,000, and this is where we want to wait for the price to pull back and then to look for an opportunity to sell. So in this case, a chart pattern might form, okay, which is a harmonic pattern. But of course, this is too early, right? This is still too early to jump the gun. But I'm just saying that there's a possibility something like this might form, okay? And if something like this really form, a harmonic pattern really came out, then I think we have a better chance to sell at this price level again. Okay, so this is something that we still have to wait to see how the price develop. So if we were to sell, okay, at this price right here, first target, of course, we'll always be looking at somewhere near the previous low. This is a obvious demand zone. Okay, so this is about 23,000 to 22,800. And if it's able to break lower, okay, one thing we can always do, okay, is to plot the Fibonacci from the swing low all the way to the swing high right here. Okay, we will always want to watch out for the 61.8%. So this is the 61.8%. And of course, we can always use the Fibonacci extension. Okay, you'll see that right here at 161.8%. Okay, coincides with the 50%. Okay, just above it, okay, there's a demand zone right here as well. So this entire zone is something that we want to watch out for, okay, when it comes to take profits. So probably here's the first one, the second one right here at about 22,000, 21,800, okay, and all the way to the 61.8% level, that's about 20,800. So that is for the Dow Jones. All right, so with that, we have come to the end of this weekly trading forecast. So thank you for watching, and we'll see you again next week.